I've been saying that that's you know what it's one. Any kind of prayer. He was absolutely amazing. Well, I want to. It's always there are many area. He was you gotta have where so sure. Yeah. I'm back here. And like your mind. I won.
We have our own bathroom. Yeah, we have our own. Makes it a company.
We're gonna go ahead and get started. We got people on Zoom and already hanging out. Thanks to everybody for coming. I appreciate it. In this presentation today, we're going to focus on like home sale contingencies and a lot of the things that kind of ensue with that. You know, and how to try to set the tone with clients, just strategies, structuring difficult deals, common challenges that come up. You know, there's all different experience levels in this group. So some of this may be a little repetitive for some of you, and then for others, it'll be like a first time to kind of like go in on some of these a little bit deeper, you know, on some of these topics deeper. So like if you need to stop me because you have a question, just stop and wave your hand. You know, we want to make sure that everybody gets what they need to get out of this, you know. Oh, home sale contingency. Buyer's purchase depends on selling their current home, right? If the buyer's existing home does not sell within the agreed time frame, they may be allowed to cancel the contract without penalty, right? We're seeing a lot. What I would say is we're seeing a lot more buyers that have home sale contingencies now. It seems like almost everybody has a house to sell. The contingency protects the buyer from carrying two mortgages, lacking funds for down payment, closing costs, financial overextension. The hidden costs of setting poor expectations. First thing I would say is, think setting expectations is the one thing that I think as an agent sets apart like the truly like great agents from like an open agent, right? Kind of knowing like, hey, this is what we're going to encounter. This is what we're going to walk through, and making sure that you take the time to set those expectations accordingly with people. I think timing of that is also critical. Like you don't want to just go in and, tell somebody who's like maybe very challenged from a qualifying standpoint, like, hey, this is what you're like on paper, and like beat them down. You got to really pick the timing on it. I think you got to really kind of gauge the best agents that I deal with. They really know when to gauge when to deliver that information, and I would say like it's an art. Like that's the one thing I would tell you is it's a true art. Some agents avoid difficult conversations. I see that a lot. They do what I call kick in the can, where it's like, let me kick this over to the lender and you can deliver all the craziness. The thing that I would say that if you can do that will help you like tenfold is trying to set some level of expectation, especially if it's a referral client. That referral client comes to you, they know you, like you, and trust you, right? I'm the guy they've never met. A lot of times they're talking to me on the phone for the first time. So if I give them some crazy proposition of some wild loan product that you guys haven't even touched on or had a conversation about, like it's very, very hard to convert them, to get them to like kind of buy into that. So a lot of times it's sprinkling in a little bit of information about some stuff. Unmet expectations create frustration. Frustrated clients blame the process, lender, agent, or market. Top agents prepare buyers. That's just kind of going back. The psychology of buyer expectations, and for whatever reason, it's not PowerPoint. Buyers are emotionally invested before they write an offer. Okay. They picture holidays, furniture placement, and future memories. Once emotionally attached, logic takes a back seat a lot of times. Every home feels like the one, right? So rejection feels personal. Especially with your non-investor clients, your people are buying, they're buying on emotion, and sometimes even investor clients. What buyers hear versus what agents say. We can submit an offer contingent on your home selling. Great, we can buy this house. Right? That's if you don't set the right expectations, that's what they hear, right? The seller may prefer a non-contingent offer. That's what you say. We still have a good chance, even though the house is 2 days in the market with showings that are back to back and you can't even get in the door, right? We'll see what happens. We're probably getting the house is what they hear. So like this.
Before I forget the question.
Yeah.
Is there a general rule of thumb? This could be for experienced agents too.
Yep.
For a percentage, first time home buyers, do I need 20 grand, do I need 30 grand? What kind of number? They're looking at $250,000. They're coming up with this range and they ask us, yeah, what kind of money do I need to close? Just to estimate, like 5%, 3%, 6%.
Back to your time, right? What kind of client do you want to work with? Do you want to work with a client that you've got to show?
I mean, they're asking us. They're asking me as the agent. Yeah, closing costs.
I think it's like very, right? Because
a percentage though, is there a percentage of that purchase price? Say that for closing costs. That's the term I'm looking at. Okay, so that gives us a general idea.
Because I think that is every deal what house are they interested in? Are they okay with stuff that's been on the market for 3 weeks, 4 weeks? Are they buying in Maryland? That's like a buyer in Maryland. They may have out of the market, they've been on the market for 3, 4 weeks and they can get full seller help and they may be able to get in with.
Yeah, I was back to trying to think of a reasonable expectation. If they're coming to you with $5,000 thinking they're getting a house, that's probably not a reasonable expectation. You know what I mean? It's like 35% of the purchase price.
Yeah.
That's somewhere reasonable, right?
Raise your hand if you've experienced something like this, where buyers' emotions are maybe not in line with the kind of what you're laying out, you're trying to deliver softly. Yeah. Set the expectation. I'm gonna hand you out a document that we created. And this is just to like help set expectations. I only printed like 25, so you may have to share. But we try to provide a document that helps you set expectations with buyers based on market times. This is local housing data as of the last report. We kind of reverse it a little bit. It just talks about like what to expect based on marketing times. And I felt like, again, it comes back as us giving a visual. You're not trying to sell it into something. It's like, here's some data. You know what I mean? And you can back this with local data to help kind of set the expectations for the client. People on Zoom, I will make sure we have copies of those digitally and we'll upload them to the link that was up there for the presentation. So in a competitive market, sellers are choosing speed and execution every single time, right? Like they want the deal that's the sure money. And it's a hard thing to, you know, kind of explain. The average US homeowner right now has roughly 295 to 300,000 in home equity. That's a stat from CoreLogic. That's a nationwide stat. Thanks COVID, right? House prices went up like bananas, but the challenge continues to be, how do you access it? How do you get one person to get that house listed, get it to sell, get them in a market where you're in a market with 7-day times, 7-day market, right? Let's talk a little bit about financial literacy, okay? Stanford puts out this financial literacy test. It's called the Big Three. I'm going to roll through, put all the here. Very simple test, right? Anybody want to take a guess at what percentage of people pass this nationwide?
5%.
30%.
29. 29%. So again, you've got to be the educator. It goes back to that. You've got to educate them on market. I mean, you'll talk to people and they're not going to tell you. Some people don't even know what equity is, right? You may have to explain to them what equity is, right? So you've really got to make sure that your folks understand, because some of these things are very complex. Most buyers know what they want. What prevents them is often fear or lack of education, right? Goes back to that fear of carrying 2 mortgage payments, fear of losing retirement savings because they don't know how to navigate, you know, taking a 401k withdrawal, fear of making the wrong financial decision, fear of taking on too much risk, fear of low appraisal, right? The strongest buyers aren't always the most qualified. The strongest buyers, in my opinion, are the ones that are the most prepared. The people that have their ducks in a row, that are locked and loaded, ready to go make that offer, that have their ducks in a row. Understanding available options, in my opinion, creates confidence when they're educated. Confidence leads to stronger offers, better outcomes. Risks of fear-based decisions. I'm just going to go through a couple of scenarios that I see like every other day, every day, all that, right? I must have a home sale contingency buyer, right? I have to sell first. I can't afford 2 mortgage payments. Most people know if you can qualify, the other house based on the data to sell, right? Unless you're on like a busy road or your house smells like cat, whatever it is. Right, it's sell. So long as it's priced right. The result, misses the next home, loses negotiating power, offer is not accepted, writes numerous offers that are sale and settlement contingent, loses out on many homes that they love, settles for a home that they like most times, not the home that they love. Bridge loans, HELOCs, recasts, and a 401k loan could allow them to purchase without selling a lot of times. We're going to take a deep dive into these. And how you can kind of execute. Here's another one. The buyer who won't take a 401k loan. They don't want a 401k payment. If I touch my retirement account, I'm going to get hit with taxes and penalties. We're going to take a dive into this, but I think it's important that you guys be educated on it too, so you can help, provide the information, sell it to your clients, explain it. I think acting as a consultant is probably going to be your best course to kind of get people where you need to go. People don't explore these options. When I talk to them about this option, a lot of times, it's like, I can't do that, right? So again, it goes back to if you just started the conversation, the person they know, like, and trust, maybe you've known them for 20 years, whatever it is, put it on me, the person that they've just met for the first time, talking about a lot of things they probably don't understand, trying to get them where, and it's not that we're not taking the time with them, it's that a lot of people, there's a relationship with you, right? So you've got to dip the toe in a little bit with them. So they continue searching for months, potentially pay more for a similar home later. Anybody know what the average price this time last year was? How much it's gone up?
It's gone over $100,000.
Median price went up 25 grand. 1 year. Cost of waiting in 6 months. What's the math? 12.5. How realtors can help. Educate buyers on market conditions. This is the #1 thing that I would preach to everybody. Educate them on what's going on in the market. Again, timing is critical, right? Anybody have good practices on when they educate them on the market? Is it at the showing, when they're first on the call? Raise a hand. I'd love to hear it.
All the time.
Upfront buyer consultation.
All right, myself. Anybody else?
I like, if it's a first meetup, I like to meet them at the property, and then that's when I started talking to them about it. Cause the importance is just getting in front of them first.
And trust. Yep. The key thing is that you're doing it. I feel like. Talking a little bit about financing options, setting realistic expectation, focus on long-term affordability. Keep in mind inflation. This is something people don't really talk about. You buy the house, you lock into the price today, the rate today, the payment today. 5 years ago, what's rent look like? Right? So that's the thing no one talks about, inflation. The strongest buyers are often the most prepared and most educated. All right, so we're going to talk about products that help home sale contingencies. Recast, bridge loan, equity line of credit, borrowing from investments. We're going to start with the recast. What is a mortgage recast? Basically, it allows the buyer to purchase the property. Then they sell after they purchase. The proceeds that they receive after the purchase can get applied to the home that they own already.
After the sale.
After the sale. And there's a one-time re-amortization done on that loan to reduce that payment.
No other fees or fee?
It's a $300 fee. Most lenders charge anywhere from like $100 to $500. Most lenders will do this. You just have to communicate it with them.
Is there a standard set amount of payments that has to be made?
1 or 2.
And is that like
Generally.
per lender? or is that like?
I would tell you if
government?
this is a option you're selling, right? My perspective is that you probably need to make sure that you're directing them to have this consultation with their person, say, this is generally what it looks like, but you want to make sure you get this information from them and probably get it in writing. That way you have it. But this is, if a buyer can qualify to carry 2 mortgages, again, keeping in mind that what do most people have from an equity perspective? Like that number is
Yeah.
295,000. This is a huge play, right? Like this is a play that we execute with people all the time, right? Like we're just positioning, they're in it for 2 months. I would say probably last month, half the loans we did have recast type.
Do you disclose that at all in the contract with, like, how do you?
They're just coming in, putting, it's not contingent on the contract because your purchase is separate from your sale. But they're usually coming in doing 5% down, conventional, 10% down if they have more money, So it's just how you position them. I don't know how many lenders are out there. I mean, I don't pay attention to a lot of them as good my competitors are, but like, I don't know how many people are really pushing this. But in my
Competitors
opinion,
hate it.
I think it's the greatest thing. It moved real estate.
Yeah,
Get people in your.
It's a deal or no deal.
yeah. Never.
You say it's like it's like
Yep.
very.
This is getting a lot more verbiage out there, at least at my fire.
So mortgage free pass, they say it allows that buyer to go and purchase the property. You're gonna come back after you sell. So let's say they net 100,000. We're gonna take that 100K and apply it to the purchase. We do a one-time reamortization to lower that payment, which is in line with then that down payment, like they had put it down from day one.
You're working that qualifying them on the per payment
Correct.
with the scenario of this little events.
Oh,
So what if the person is planning on doing a recast, but they're gonna use all of their proceeds completely to pay off the loan? Is there a
I
certain
would
amount?
probably tell them to look at financing for that, because we can talk about that too. Usually with loans, the loan's got to hold for 6 to 9 payments for a lender to be able to make it. That means, when the loan's gonna pay off. There's a lot of costs to doing a loan, and they make their money on. Jeremy?
So for someone who's gonna be essentially using the proceeds from their sale as their debt to cover the down payment and closing costs, to do something like this, they would still need to cover the down payment and closing costs out of their own pocket.
Correct.
Just put the proceeds towards the lump sum.
Correct.
So they would need to come up with the down payment and closing costs in order to be able to do this.
Yeah. Yeah. You'll qualify. Any more questions on this? These are the perks of it. Strong offers, produces or eliminates home sale contingencies. Gives seller greater confidence, these are not contingent. It avoids the refi, which is a big thing too. Some lenders, they're trying to get both loans, so they don't even make the client aware they can do this. Okay. Trying to get both loans.
Didn't you tell me you have like 6 months?
Yeah, 6 to 9 months, depending upon the product and program and lender. Yeah, most of them. Anyway. We got some scripting which I'll hand out too. Here's a little scripting if you want to read through it. You want to take out the script, please? So this scripting, I just put one here, but we have one that's got a couple options. And there's some other scripting that we'll go through on some of these other things as well, just to kind of tune you in how to like have a conversation about it. And again, it comes back to like, you're just trying to generate a little bit of interest that there's a path forward, right? It's to the lender to qualify, not qualify. But again, if we're having that conversation with them for the first time, it's a deer and headlights conversation. Like I would love you guys to be a fly on the wall. Some of them it goes extremely well. Some of them it's very like it's rough, no matter how good I am at explaining it.
Deer in the headlights.
Exactly. We're gonna talk bridge loans. A bridge loan allows the homeowners to use their current home equity to buy a new home before selling, helping cover closing costs and down payment. Okay? Basically, we'll give like a quick scenario. Let's say you got a person has $100,000 loan, right? And they have house sells for 400. You would probably get 200, maybe 200 and some change out of it to plop down on the next purchase
I haven't been in there to check.
before they even go out and buy.
Let me go in there in a
So
couple
as they're buying,
minutes.
they're taking that money and they're
All right,
using that
thank
as
you.
their down payment, right? It's just qualifying for the bridge. Again, this is a proactive product. You gotta kind of be ahead of this a little. We have a product. It does allow you on conventional loans to remove the contingency because they offer a guaranteed buy on it. They look to the realtor to give us information on the price that it's going to sell at. So they're looking for you to provide that data, right? They obviously do their own evaluation, but it sets you as the point person. It's good because it allows us to not have to count that mortgage payment they have against them. Because what they do is by offering that guaranteed buy at the end of 6 months, if they haven't bought, they would buy the house from them.
Isn't this,
Predetermined price. Go ahead.
isn't this a really expensive venture?
Yeah, let's talk about it. So what they do with these, and this is generally what the cost on these now, the one third party we use for this, it's 2.25% of the sale price. So it's less than what your commission would be. But again, it all comes back into your numbers and gives them an option to get into the house. The way you're presenting this is we're going to give ourselves marketing time that we don't have to list it as a fire sale, right? Below market, and we can list it at a more reasonable price and give it time to garnish a higher offer, essentially, versus having to list it below and hope to God it runs up, right? Which is what happens, right? Everybody, if you list a house and you gotta have it sold a lot of times, I mean, sometimes the market right now is so kind to all of us that you get a great price kind of regardless, but you know, if you're listing it below market, that's one of the big selling points. I think, again, at the core of this, you're trying to give them a tool. The way that ours does it, they do it as a first or second lien. And I can give you more info. This really isn't so much about like our product as just wanting you to understand the concept within the market. Questions about bridge loan?
Are the interest rates a lot higher on them than on rates?
There's typically like a preset amount of money they're making based on the sale, and it's not really an interest rate. So they're grabbing a certain amount of percentage in price. Yeah. It's more scripting on it, which is probably also scripting in the that handout. Any more questions on bridges before I jump forward? People always have a lot of questions on it when we go over it, but honestly, it's like, you know, you figure at 2%. I mean, I don't know. Some of these houses they're selling so quick now. It's like 2% is really not much in the grand scheme of it. Equity lines of credit. So if your buyer is like ultra proactive, and where I would say that this plays out well right now is with like your baby boomer clientele, in my opinion. They're sitting on a massive amount of equity, most of them. And oddly enough, a lot of them have mortgages. They're small, but a lot of them have mortgages. Basically, what a home equity line of credit is think about it like a big credit card tied to your house, right? The difference of this is they'll assume second lien position. They'll typically lend most banks 80, 90, some will even go to 100%, which I really don't recommend because you can kill them the terms. This is a great way for you a lot of times to make a cash commit. You know, you got that baby boomer who's downsizing. Maybe they have a $500,000 property, you know, but they haven't downsized just because, you know, they're not trying to navigate the market. And let's say they have $50,000 or $100,000 left to pay on it, right? They're sitting on $400,000 in equity and they may only want a 3 or 325 house. Sitting in the walls.
Banks don't want to know that you're using it.
Yeah.
Yeah, we gotta do it first and don't tell.
So. What I will say about it is this, just being fully transparent. We're not cheap, right? Like. But the reality of it is you know the shit's. Okay, we're close, okay? My opinion is if you have, and it's scenario specific, so if you have a couple that's been looking for 9 months, and you can get them to engage and go get this. Let them get it for your bank, it's totally fine. But if you're like, oh, they're interested in this house, like this is what it's gonna look like we need to make sure this gets done because they're just calling me for the first time, probably I don't know. Do you know what I mean? Like, you're not trying to deal with like some bank credit union who may or may not give them a good offer. They may get a bad automated valuation model. A lot of times they'll run AVMs on them. They won't do appraisals on them. So what happens is I had a house, it was actually for one of Kayla's clients. And he had renovated the heck out of this old farmhouse, right? But if you look it up, I mean, it was like, you know, you had Google pictures and it looked like hell, right? So the AVM came in at like a quarter of what it was probably truly worth. So we ran a full appraisal, got him more money, you know? He was still a little high on probably what he would have sold it for, but you know how buyers are, right? Everything's worth $1 million.
I'm sorry if I'm missing something. So what's the difference between this and then a bridge loan? You're using-
Proactivity versus reactivity,
Okay,
realistically.
And the
This
bridge.
is the cheap option. This is, if you can get your people to be proactive,
right.
this is your baby.
You can have this open, but you're doesn't mean you're pulling.
Yeah, here's
right.
the best part about a proactive line. You're not paying payments for this until you draw the money.
Right, so you have it.
So it's like a big credit card. You go get a $50,000 Chase Visa, but you haven't taken any money on it. There's no payment.
This is happening.
You're just walking around. For your investors, you have investors that want to deal and buy real estate. This is the product. They have all the equity in the world. In their accounts. Now they can go and kick off. Some property that's. Can't get financing on it, right? They bring it up. I'm saying we are worse students. Yeah, the terms are about the same. Charge money. Right, so like, just being transparent, but if you're like under the gun, it's a call, you know?
You're gonna make a.
Well, we're gonna get it,
Try.
we're gonna execute, you know what I mean? Like, that's what we're big on execution. But I like to be transparent with people. I think that's an important part of it. Like, when I went to get mine, I went the number first to get it. And I used, I mean, I bought a couple Airbnbs of mine, used them for down payments, but like, you know, in theory, you have that person that's sitting in a ton of equity. Remember what the statistics said, the average homeowner is 295 to 300,000. Right, like you're sitting on your real estate, you're sitting on transactions for yourself. It's just a conversation. You've got to learn to have these conversations, at least to generate interest, right? Just to generate enough interest to get them to pick up the phone and start to walk down the road, right? Like, what are most of those deals for you? They're 2 deals. So spend a little bit more time selling, setting expectations, right? It's 2 deals. So you're accessing the equity before selling, increasing buying power, strengthening purchase offers, reduce sale contingencies. I mean, there's a million ways to use a home equity line of credit, but it basically is giving you access to those funds, gets you more competitive multiple offers. The thing that I like about them, even on just the regular front, is if you can get somebody to qualify that's non-contingent, now they have this bigger down payment, which is going to be more attractive to seller, you know?
You have to do this before they put the house on the market, though. You can't put the sign in the yard and then have them call their vendor.
We have one lender that will do it, they just have to take the sign down for a day or two. And they're actually, it goes back to like that proactivity piece, right? Like, I think it's like, let's be transparent, we need to be proactive. Really, when you go into apply, they're gonna ask you what you want it for, and I would just say, hey, we're looking to maybe possibly do some home improvements, like, I wouldn't get into all the minutia. Some banks are like hell on wheels about this, and some of them really don't care. I had a woman last month, she went to her bank. She told them what she was doing and they still gave it. You know, I think it just depends on who you talk to, but to your point, it's been solid difference. Less is more, is what I would say.
So those terms real quick, I was wondering that 100%, you said you wouldn't recommend it.
When I went to get mine, like it was prime, 90% was like prime +1. And then 100 was prime +2. So it was like prime now is 675 versus 775 versus 875. Here's the deal. Think about it like this.
Yeah.
If you're doing it for what we're discussing initially, how much interest are you truly gonna pay? 3 payments?
Yeah.
We're talking about pennies
Right.
in the grand scheme of you
Right.
being able to get these people
Yeah,
to navigate
No, yeah.
and get them to where they're trying to go. People are appreciative, but again, this is a slippery slope of explanation, right? Like you've focused on the scripting, right? Like saying timing of when you're gonna talk to them. Here's some scripting for you. You gotta be front and center.
You say member first is always a good call first for these, or?
It's, I would say, for my, what I see from referring. Their automated valuation models have tended to be very flexible, right? Meaning you're getting like a good solid appraisal. The expectations you need to set is it's an automated valuation model, right? I'm the authority on value. Okay, because that ABM will make an ass out of you. Do you know what I mean? Because you're gonna turn around and sell that thing in a couple months.
Right.
They got this ABM at 700 and you're like 600 all day, you know what I mean? Like, you know. Just be careful. That's all I'm saying. Borrowing from 401k. We put a lot of homeowners in houses with this. A lot of them. Most of your companies nowadays, you go to work for, they provide you a 401k. A lot of the companies provide a match to it. So they'll do dollar for dollar for the first 3% or 5% or whatever, right? So person goes on after 6 months of employment, a lot of times it's a investment. This is the way they got out of doing pension plans, right? So basically it's tax-free dollars into an investment account. And over time, people that have been their employer for a long time, it accrues or the company matched to it, you're vested after a period of time. You would be surprised at the lack of education on this, where people don't know they can take a loan. Most of your 401k providers will do a $50,000 loan. There's interest on it, 6, 7, 8%, whatever it is. But if you're taking money out to buy a house, right? And you're gonna sell your house and then replenish said funds, you're gonna pay 2, 3 months interest, like we were talking about with the HELOC, same kind of deal, right? It is, in my opinion, one of the greatest things to be able to access. Some of your 401k providers don't allow, but I would say it's probably, they don't allow you to take a loan. Probably like 5% is what I would say by the math.
And
But-
tax implications.
There are no tax implications on a loan.
One good-
Big difference.
Big.
And the one thing is
I get some. Sometimes they just give you the loan.
you're paying the interest back to yourself as well. Yeah,
Basically, they keep it in the market and they keep paying you on it. But you're.
Yeah.
That's the play, yeah.
Is there a time frame do you have to pay that back?
So most of these providers, like if I was to log into mine that I have, from the last employer, they'll let you stretch it over 10, 15, 20 years, and they will provide to you the data on what the projected payment is. You can simulate, hey, I'm gonna go take this loan. And it'll simulate what the payment will be, and you can decide the term and so on and so forth. Yeah, so the data is there, and they can go get the data a lot of times, in 30 seconds. You'd be surprised how many people don't even have a login to this. They just wait for their quarterly statement to come. Look, by no means am I suggesting like, go spend all this money, right? I'm just trying to have you understand ways to get creative, to get people in homes. This is the stuff that we look at all day, every day. Here's another one on IRAs, and this is a slippery slope with financial advisors. They will hate me for this. A lot of times there's a 60-day in and out. You can pull it, as long as you put it back within 60 days, there's no penalty. So there's a plan B for 401k withdrawals, IRA. Access to down payment, closing costs, cash reserves. That says.
Damages of our.
Yeah. So this thing just compressed the PowerPoint and it's like none of it's reading right. Yeah, it keeps, well, we keep you on your toes, you gotta read.
Just wait for like shit or bad word to come up.
We'll put that in there. Is this your benefits? Increased offer flexibility. Faster access to funds. Most of these you can get out within like a week and a half. They like ACH it to the buyer's account. It's quick. Do some scripting on it.
Tell me, seriously.
Well, you can tell when people that wanna do the work ahead of time. Right?
Yeah. I'm gonna keep going. Appraisal gap coverage. I threw this in here because this is a hot topic right now. I'm probably gonna crash and burn on this one. Basically, it's a buyer's promise that if an appraisal comes in below the purchase price, they'll bring additional cash to cover the difference, right? Let me give you an example. Purchase price 4,500, appraises at 475. The gap is 25 grand. Let's hope to God that doesn't happen, right? The buyer offered 25,000 of appraisal gap coverage. Here's a scenario that you can get creative to kind of fix it. When they have money down on these, appraisal gaps a lot of times aren't a big deal, right? The appraisal gaps become big deals when buyers have less down. So in this situation, the purchase price is 400,000, loan amount of 320, down payments 80K. They're at 390. In this situation for us, because it came in lower, our loan to value is based off of the appraised value, not the purchase price, right? So it shifts our 82 to 82.05%. That person has good credit. MI on that's probably like 30 or 40 bucks. They can just jump into MI, deal closes, we move on. So I would tell you to be able to explain this. There's, this is probably a critical thing in maybe having some visual aids, right now. Because I think a lot of people don't understand, number one, how to explain it. And then providing scenarios based on, here's a hypothetical. I would jump in and just use AI, get specific with it. We had Martha Mitchell and I had some clients, they didn't speak very good English. And they had a cut on one of theirs, and we had to pen it up and basically showed them a couple options of kind of what it would look like. But I just threw it in AI and had AI give breakdowns on like what their differences would be. It's really like artificial intelligence is really good at giving those breakdowns. Like I would tell you, like, if you want to create some quick hypothetical scenarios, throw it in AI, let AI give you, hey, here's 3 scenarios of what we could potentially be looking at. Cause it's gonna put it in a lot better words and context than probably you or I are. The ones that you gotta watch out for when you do appraisal gap coverages are your high LTV ones, people that just don't have the cash, they don't have the money. You know, if you have a 97% conventional buyer that was doing 3% down with limited money and it comes in low, like they gotta basically bring net the difference because they were using their max LTV, right? But if you have somebody that's putting 10% down, 15% down, 20% down, you can just rework the loan line. They're not bringing any more cash. The LTV changes, maybe mortgage insurance goes up a little bit. Maybe they have mortgage insurance and didn't. If they had a lot of money down, maybe they don't even have private mortgage insurance. Here's the other example. This person has way more flexibility, right? Like they can probably, and I think it's important to kind of understand, like, when you're in one of those competitive situations, like, kind of explain the hypothetical risks to them, like, give it out on paper, and that way they're fully informed. I mean, gosh, you can even have them sign it, so it's not like they do, like, whatever, you know, little CYA. Here's another one. We're gonna talk about delayed financing. What is delayed financing? If your buyer can go and write a cash offer, right? If they have the money in cash, maybe it's in investments, maybe they have a big money market, whatever. Fannie Mae will allow you to come back and immediately put a loan on it. They treat it as a cash out refi. You can do it days after closing. And it'll go up to 80%. So again, it goes back to how well your person's positioned from a financing standpoint, you know. You know, if you get one of these clients who's just loaded, this could be a good option. You know, that way they're a cash deal for you right in your offer. Questions about delayed financing?
Do you use this much?
From time to time, I would say probably once every 6 months. It's just for lack of education. It's not like mainstream agents don't know about it. Yes, talk about it, and when I talk about it, you know,
What would be the advantage?
you're writing a cash offer.
No, not to us.
Reimburse or something.
They can take their money. And give them their money.
Yeah.
Some people are interested in mortgage payment and keep their money in the market.
Are the rates similar to the conventional mortgage?
It's treated as a cash out, so it's not the same price as a purchase. It may be like an eighth or a quarter higher than a purchase loan, not much.
So you can use that on a auction property?
Yeah, delayed financing. They come back, they get in, come back, put the loan on it, they write a cash.
Or are you the one doing the
I think it's whoever.
No, what I'm saying is you set them up how you normally would. We go through the thing, it's a cash offer. And after they're in, they come back to you for the refi, because the refi. Gotcha.
Another little better in your cap.
Yeah, sure.
The best agents help buyers navigate these emotions. I mean, you're as an agent, you're like a full-time therapist, let's be honest. Realtors often act as buyers' emotional coach, isn't that the truth? Listen to concerns, acknowledge emotions, provide facts and market data, slows down impulsive decisions, helps buyers focus on their goals. Questions? Anybody have any questions? It's basically it. Bill, you got anything?
I got everything.
Maria, what phone we've got?
We try to take a little deeper dive on some of these products. I'm gonna hand out the.
Yeah.
form. Thank you. I got 10 ways to make your upper stand out.
He's the expert.
That last one. It's like, it's hard, but it's gonna be.
I show that.
It's telling me on it.
Andrew, do you have any more of those? Okay.
Right at the top, after me for now.
So yeah, I think you give it.
I need it, but I can see. I don't know. I don't right? But you're gonna, thank you for in that. And I, yeah. Yeah, so I. You know. Were you talking about the laundry that I needed? That yeah, you know, there was no manipulation. In the end, yeah. And it's my recommendation. It's not even something that's made this. Yeah. That would be beginning. Yeah. So I. There was no way. I think he's gonna go for you started your name. Yeah. Yeah. And I do very good. I mean, I don't. Yes, if I had. Yeah. And I tried to do something for what's the pain number. Yeah, I could just take it. Yes, oh, you can turn it or yeah. Yeah, you know the area. I know the area, right? Really didn't think I was gonna get it. If I saw your thing there. Yeah, I was kind of. Came in and yeah, okay. And it didn't. Yeah. I get now. We near some that day. Yeah, and once the contract does it, it's best to have it. And they were like, even crazy to go, so, yeah. We ended up with one part. Yeah. And, or the day, so, yeah. Yeah, there's some work. But I didn't think there. Now, there could be sits and flex that. Yours. Yeah, don't work. Yeah, thank you. I do never. Yes. Like the biggest thing every day. Yes.
Yeah.
Saturday. Yeah. So you didn't eat? So yeah, like like that. It is one of the. It's not like a yes, it's so navigating this. Yeah. Be there, which I recommend. Walk through, you know, there's things to do, like some functional, you know, I'm gonna send her, hey, wait, I get out and quote so she can. Yeah, and then when people. There's a baby. Right. So I control. Yeah. You're just saying it doesn't quite, see the name. I Trouble.
You plug in here.
They said to me the other day, like, you need to, I think you're about to face. Perfect. I can start with the that's grown up. Survival mode. That's just how I I'm on top of one thought. I'm on top of one thought. You ever like to, you know what I mean? Yeah. I'm not. House stuff. I'm gonna go over to. Forever, you know. So. Those are usually good with this you. Like now you doing that.
What you got? Daily basis.
Zero. You know.
Listening to this conversation, loving it. What's probably no. I probably think like I probably run into AI as a per guy, and then like base it off of that decision. And that's you can just hey, what's going on? What happened? Yes.
Yeah.
I'm a mix. Thanks. I want to enjoy it as like no, no.
Holy shit, I do for you.
Sorry, kind of around. How you doing? You busy? Okay.
I can explain. So just down here. And Florida.
I didn't Yeah, I'll meet you there.
Yeah. How are you doing? Yeah. Everything, come on.
Office in the new office, so.
Feel good. We got it. Whoever's office does it.
Yes.
They negotiate there. Actually, a lot of the locals say Guinness. A lot of the locals say Guinness.
That's what I'm saying.
My aunt says, say Hanover, she says Hanover.
Yeah.
Yeah, I'm there, I'm there.
That's it. Wherever I was, I had to drive my car to.
This river. So when the new office,
How far are you from that?
Okay, but the Gettysburg office is like 7. So it's interesting, but it, it's good.
you still doing your coaching then? Were you doing?
Yeah, I actually have a call today.
Okay. Good for you.
I've been doing homework. That's the one thing I've been struggling with. I've never been a homework person, not even in high school. Yeah, we had to like.
My homework is good. I go. Everything taken.
Things that I need to be doing.
Well, I'm just telling Debbie about that. She asked me about that. Yes. Debbie, she doesn't do. He basically. I don't think I know one. So I'm gonna be here. Did you? But actually, I joked to her, I was like, you know, well, I'm up here talking about it. What you like.
And you licensed in Maryland? Good. There you go. And that's, I mean, that's such a reciprocal. Yeah. Yeah. Get the report. Let go. Really? There you go. Yeah.
Yeah.
Look out for that.
Take small.
They're down, they have their, I love it. They're in. But it shows like the title. I can't govern, I like them, but I have my resources.
Yes, sir.
I just remember hearing his name now, and he was like, he was like, good one. Yeah, I never interacted with him, but just came out.
Listen, wings, bro. Well, hell, I drove out to Cambridge for that. Must be back. Yeah, I never. Out past Cambridge for, I went to show a house. Worked with these people, working with these people, 2.5 years. And they ended up buying something on their own, just south of there. No.
You better wait for and his.
Andrew, thank you. Absolutely. I never heard of a recap.
All of the shit I take for granted. I know that you learn every day.
So, like I was talking to this morning, the people that I'm gonna go see. I mean, they said got a lot of options. I mean, if they wanna, their house isn't worth. Yeah.
Some option, you bought a.
The first guy that
You
came
go
back,
figure out.
and he's like really pushing it up.
You know,
You probably tell people this a lot, but you don't understand.
Oh, yeah.
You're the one that go up. One. If now I can't shop insurances because I have a claim.
Yeah.
You know, not that I'm ever planning on selling the house, but it's like pushing people to file claims and just act.
I mean, I
You want.
bought one of my clips using my HELOC.
oh, whatever.
And I replied and said, just get my money back so I could use that for any upgrade that you. So. That. It's just,
He has numbers with me, so I can't go behind him. He came out, but I know like for him to send me quote, I have to write his ass. I can't even refer him to my clients because
Speaking of self-report.
when they do work, they do good work, but communication in between. Harkins told us, we did a, for my first 2 or 3K loan, you know, because it was through family. Well, the contractor fucking matters. That's probably that. Contractor matters. Somebody who knows how to handle their fucking paperwork and like, he will tell you everything. Contractors don't. He will tell you everything that you need. And I had to sit there until 1 a.m. reading. Oh, you fucking idiot. I'm just like, no, you're a fucking idiot. All you gotta like,
And I'll walk.
you run a business. How is it so hard for you to write an itemized fucking list of everything?
Yeah.
Why, this is
Like
not
that-
new to you. And that was a fucking.
They don't need
That's
to
when
be good.
Harkins did a loan with my baby daddy and he's like.
Yeah, like, I was something, or they think for a recommendation, like, nobody calls them back over that because they don't. People are, and they don't have to be good at it. They just have to be good at doing what they do. People will call and deal with them and.
Changes and they can't find them.
Yeah. And I'm like. We have to stop taking everything so personally, but. Don't fucking cross me.
Yeah.
And if something goes ugly, I would much rather you like, listen, I gotta tell you there's. Just to be upfront with me, I 100%, like, I respect that 100% over and over.
Wow.
Something,
Hey,
trying to hide it, go behind my back, like, I don't like that shit.
There's.
All
Conversation I don't like to hear, it's still a professional conversation, so being the same.
I had a lead once with Jeremiah, and it's usually like, how many times do we have somebody, we send them to one lender and we gotta send them to another? It's usually how it goes, but he was like, Dave, this is the first conversation, but so-and-so, they knew so-and-so, and they wanted to send as their agent. What happens in the business? You know, I was like brand new and I didn't have the relationship with them. I was never mad at him. I was never mad at him because it's not his fault, you know? But, yeah. But if he would have been just like, oh, I'm just not gonna tell her, then I find out, then I would have been pissed. Like, have you hid this from me? Like,
Because he gets it.
Yeah.
I have a client who's stupidly just sitting there like waste 3 lenders. I'm like, all lenders are gonna be shady, but the ones these. But I'm like, hey, I just need to know, is there one that makes so not have to be right as much.
Oh my God, I had such a know-it-all buyer once that I made $0 off of, and he swore he had to go to PNC. And he's like, they told me this, they told me that, and then by the end, I didn't end up paying more. I'm like, you chose them. I fucking told you, that's your choice. They ended up buying them, he was living in, and he ended up moving in. Very.
Yeah. Look,
Yeah, thank you. See what they have to say. Nice spreader. I like, yeah. I'm Bob, by the way. Hey,